Hello everybody, welcome back to the channel. Here we are again with the weekly report where I go over my portfolio's performance, I go over all my trades, and then I go into like a special topic of interest. And this week I'm going to be talking about bearish zebras a little bit because I've been putting on quite a few of those this week. This week was pretty good, money printer go burr. You can tell from the daily close snapshots, I'm up on the week. If we go ahead and look at the weekly tracker, for the week, I'm up 2,900 in terms of net account value. For the month, I think I'm down about 1% because on the last day of June, my account was above 200,000, so I'm down about 2,500 for the month. But for July, I've realized 7,300 in premium so far, so that's pretty cool. This week's trades, I'll just start from the top and go down. I did end up selling an Intel put. I had a video that went out on Sunday where I talked about selling the September 49 put, but I couldn't get a good fill, so I went up a week and moved up a strike and got 50 cents for it. I mean, 50 bucks is still pretty nice for how safe I think that's going to be. TME, I had 5 leaps on TME that I bought for about $3. TME tanked on the news that they lose exclusivity rights to some music makers or something. And I don't think that's going to affect their profit because users are set in their ways. They're not going to be looking to switch streams. China is the brand to beat in terms of that industry. So I bought 12 more long calls on that, basically doubling my position on TME and bringing down my cost basis for those leaps significantly. We got till 2023 for TME to go up, essentially. I also wanted to play Baba some more because Baba fell down quite a bit, and I thought we might be reaching some levels of support. So originally I put on a Baba put, but then I decided instead I wanted to do a Zebra, but I didn't want to have 3 positions on Baba going at the same time. So I closed the Baba put immediately that I put on, like within 5 minutes, made $8, but that's just more of like a take it off, so I want to do a different trade instead. And I did a bullish Zebra on Baba, and that cost me $7,700 to secure that position. Tuesday, my dividend got reinvested in Nusi, so I picked up 3 more shares. Nusi is actually a pretty interesting thing because like every $150 that you invest in Nusi is you earning an extra dollar a month in passive income for life. So that's something that's really cool to think about. Like if I ever got tired of doing options or thinking I was losing my game, I could just put my entire portfolio in Nusi, and I'd be making a passive $1,300 a month right now with my current account size, which is kind of crazy to think about. Anyway, back to options because that's why we're all here. I did pick up 1,000 more shares of Wish because it was below $9, so I lowered my cost basis of my existing position. And since my cost basis got below $10, I sold a pretty close to the money call, covered call on Wish. Picked up $20 per contract, but since I have 2,000 shares, I was able to sell 20. So I put $400 in my pocket. And I only put this on because at this point I'm like, you know what? I'm fine if Wish gets called away at 10 because I'll be profitable on the position in terms of like short term, like from the stock position, and I'd also make $400 from the call that I sold. So I really didn't care if Wish finished in the money or out of the money. So that's why I put that on. It seemed like a win-win situation. Thursday, I bought a bearish zebra on Zoom. Zoom shot up to 395, and I figured 395 to 200 or 400 was going to be like a supply level where it's just going to bounce off of. So I bought this position. Turns out it immediately dropped to like 385, so this would have been a $1,000 gain, but I didn't have my limit order to sell the position, so I didn't expect it to happen that fast. And at lunch, I was able to close the position for like a $312 gain, which isn't bad. So like 3 hours of work for $312. I like that hourly rate. AT&T, I put a buy to close limit order in on my 2 contracts I had for T. One got filled for 5 cents, and then on Friday I decided to pay the extra penny to get out of the other one, so I didn't have to mess with my options log and just put that log, the information in on one row and not have to look at it for another month. Rocket, I had some puts that were expiring this week. I was able to close for $2 each and just be done with it. So a little $42 gain there. Friday, I apparently like Bear Zebra plays. So I bought one on AMD and Costco. I also sold a put on pins at the 55 level. I think pins is going to see a lot of action at the 58 to 60 price range, and I think it's just going to go up. The reason why they dropped after earnings is because they said they lost a couple, like 5% of their sellers on their platform. But to me, that just means the other 95% just get more action. I don't think that's going to like destroy the company as much as the price drop in the stock seemed to indicate. So I thought it was oversold, which is why I sold a put near the money on pins. AT&T decided to sell some calls against my leaps again. So 20 calls, $360 in my pocket, and that's above my break-even point on the PMCC. So, I mean, easy money, but this one is till September 17th, so it's going to take a while to get there. There's just not that much premium in T at this time. In CAT, I sold a call spread at 210, 212 in the morning. I saw another trader put this on. I thought it was good, so I tried to parrot it. And then CAT looked like it was going to bounce back, so I chickened out and closed the position. And immediately after CAT went down, this would have been profitable. Like, that's what you get for just parroting someone. Just don't do it. Learn how to do it yourself, because it's a lot easier to stay confident in your trades if you're the one making them. For the week here, you can see up $367 in realized income. Wish expired out of the money barely, so I'm actually a bit concerned that, or not concerned, but I'm curious if I'm going to be assigned anyway on some of those, because on Friday, Wish was in the money at some point, and then after market, they got pretty close to it. And as a realized level for the week is 767. And here's Wish on Friday. I told you, like, it went in the money, so like there's possibilities that people chose to exercise their contracts. So I won't see that until tomorrow when I log into my broker and see. And even at close, there's at 995, I think it was, or 998. So it was like 2 cents away from being in the money. So people could choose to exercise. They just wouldn't automatically be exercised. It even got really close within that hour window afterwards where people could still exercise. So I'll be curious to see if I get assigned on any of these. Even though it finished out of the money, I could see a couple contracts getting assigned. We'll give an update tomorrow in the comments below if something happens like that. Current positions. Not really much to talk about here. Here's Wish. I bought the extra 1,000 shares. Got my cost basis down to 984. I think it was almost at 13 before. What we got going on here? Here's that Baba put that I still have on. I think Baba's going to be up long term, so I'll just keep rolling this one. Wish, I still have this 15 put. It's in the money. Keep making a little bit of money out of it while I keep rolling it. What's kind of interesting is people are always afraid of being put shares early if it's in the money. And here I've been sitting on this 15 put for months now, and like I've not been assigned or put those contracts. So kind of interesting to see that. VST, I guess it was up 6%. At the bottom now, you can see my combo orders are kind of split down. And these are all the Zebras I have on. The Bear AMD, Bear Costco, and the Bearish Zebra on Baba. And I'm going to talk about the Zebras in a second here. Or I'm going to do it right now. So the Bearish Zebra, I made a video about bullish zebras, and you can watch that. I think I did a pretty good job explaining how that works in that video. I'll put a link above me here. But a bearish zebra, it's the similar setup, except you're doing it with puts. And basically what you're doing is you're simulating being short 100 shares of the stock, but you have a max loss, and you lose slower if you're wrong than had you just sold 100 shares and been short those shares. The setup is simple. You sell an at-the-money put, look at the extrinsic value that is on that put, and then buy 2 in-the-money puts for the same expiration, where the extrinsic value of those bought is equal to or maybe slightly above what you had for the one that you sold. If you're liking this content, go ahead and click like, subscribe, and turn on notifications so you can stay up to date on any videos that I put out. Alright, so I'm going to zoom in here. What you're looking at is my bearish zebra play I put on Zoom. And if you haven't seen these before, the blue line is the profit or the P&L at expiration. The pink line is the P&L at whatever time you have here. On the left here, you can see the P&L for whatever price point that you're hovering over. And the price point is on the bottom here where I'm moving this mouse. You see that line going up and down. So that's saying like at 360, I'd make about 3,200 or 3,392 at expiration if Zoom went down to 360. So anytime you're above this zero line is when you're in the profit. And these Zebra plays, like your profit zone is starting right at the stock when you put it on, unless you pay a lot more extrinsic than you're supposed to be doing. So I put this on when Zoom was sitting around 393. So let me see if I can get to that. So 393, you can see my P&L for the pink is already almost at zero. For every dollar that we move, so let's move to 390, so $3 here. You can see $300 gain because every $1 that the position moves in your favor, you make $100. But on the opposite side, if you look at the pink line, as you move down, you lose slower because of the dynamic deltas and how that all plays out. So let's say Zoom went up to 420 immediately after I put this position on. If I was short 100 shares, I'd be down, well, that's 25, so 2,500. But if you look at the pink line there, I'm only down 2,200, so it loses slower than if you had 100 shares on, which is why I'm starting to really like these Zebras, especially when trying to play a bearish position, because for some reason I just don't like doing call spreads. Let's go ahead and like look at a different one real quick. So I put on Costco. Come on. Alright, so looking at Costco, I can't put on the February on-demand feature yet, so I had to do the 28th. So we could be looking at slightly different strikes than what I put on in my real portfolio. So anyway, I'm not sure why the bid and ask are not filling up here, but that doesn't matter. We only care about extrinsic value. So if I was going to put one on Costco right now on the 28th here, all I would do is go to at the money put, click sell, look at the extrinsic value, that's 660. So then I'll look for a put in the money where times 2 is more than that. So I know 233 is not going to do that. 350 does. That equals like 7. So I'll buy 2 of those. Change this to 2. Now if I go to the risk profile, you see I in fact have the position. The graph looks the way I expect it to. And my max loss would be 2,300. But for every dollar we move in the right direction, I make $100. So that's why I really like these. And there you go. That's how you put up the Zebra. It's pretty simple to figure out what strikes to put on. You just look at the extrinsic value column. And if you don't have that, in order to add that on Thinkorswim, on layout, you click here, click customize, and then type in extrinsic, double click, and click OK. And you can see it added that column. Alright, well I think that wraps up this video. Thanks for watching. Like, sub, subscribe, and share it, and see you guys next week.